Hi, we all know that mutual funds are quite different from stocks. In fact, unlike stocks, they aren't traded on the market and their actual value is their net asset value. However, there is now a certain category of mutual funds that can be traded on a stock exchange. These are known as exchange-traded funds. As the name suggests, these mutual funds have their units traded on the stock exchange. Just like stocks, investors have to purchase units of these mutual funds from the market at a market price that is determined by the demand and supply for these units. Another significant feature that sets apart ETFs from other mutual funds is their purpose of creation. While a mutual fund in general is created to outperform its benchmark, an ETF is created to simply mirror the performance of the benchmark. Because of this feature, there are many types of ETFs, each created to track different asset classes such as commodities, stocks, and entire sectors of the economy. One of these ETFs is the Index ETF. An Index ETF is built with the purpose of mirroring a certain market index. It works like a closed-ended mutual fund, where funds are raised first and then a portfolio of stocks is created to mirror an index. After this, units of the Index ETF are openly available to trade in the stock exchange. Unlike a regular mutual fund that is traded through an AMC, the units of an Index ETF can only be traded as per their current demand and supply in the stock market. Let us look at some advantages of investing in Index ETFs. First is the low expense ratio. Though the trade of ETFs incurs stock exchange charges like commissions, etc., the expense ratio involved in an ETF is lower than those of mutual funds. With the availability of ETF units on the stock exchange, they can easily be acquired and sold off intraday, thus making them more flexible than other funds. This even makes asset allocation through mutual funds very easy, as one can move funds from one type of an ETF to another instantaneously. With the purpose of mirroring an index, your portfolio will grow as the index grows. As indices are a common indicator of how an economy or a section of the economy is performing, an index ETF can help you enjoy a sector's or the economy's growth with a simultaneous growth in investor wealth as well. Index ETFs suit those investors who are willing to pick up high risk, as a downward trend in the index could mean a fall in the value of the investment as well. Also, since ETFs are only available via a stock exchange, investors might face liquidity issues if there is a slack in demand for these funds. Therefore, proper research is needed to make the decision to invest in Index ETFs. Before choosing these ETFs, one should account for such factors and how this product will fit into their overall portfolio and help to fulfill their goals. Thank you for watching the video.